And we are live for a very, very important discussion that is raging all over X, inside the Tesla shareholder crowd, all the Tesla tubers and Xers. And it's a very, very important question. And it has been raised by Rebellionaire, who often puts up great content on X. Thank you, Rebellionaire, for your contributions to the discussion. But this time, I might have to push back on a few things. So let me explain what's happening here, what the real questions are, and why Tesla shareholders are very concerned, some of them, about the SpaceX merger and the fairness of it. Are we getting paid enough? So here is what Rebellionaire basically outlined. As you see here, he posted a video that got 211,000 views on X, which is a lot. That's not easy to achieve. Congratulations on that achievement. And here comes the argument. Rebellionaire basically says, Tesla shareholders funded the robotaxi vision through the hard part over the last 10 years effectively. The missed timelines, ridicule, drawdowns, and the FSD is impossible years. So if Tesla ever gets folded into SpaceX, the question isn't, wouldn't that be cool? It is, who gets paid for the robotaxi value? So the argument goes like that. We as Tesla shareholders, we have been there for Tesla when it wasn't easy. We have been there holding that stock over the last 5 years or 4.5 years, and it just went down. But we kept believing in the vision of robotaxi and FSD when we actually lost money. Not me, but some people lost money on the stock throughout these tough years. And now that robotaxi is coming to fruition, now that all that weight actually is paying off, now we are sitting here and will get merged into SpaceX with no good compensation for that, because robotaxi is still not scaling to the extent we all hoped for, and the actual money is not being reflected in the stock unless we actually start scaling robotaxis into the millions or at least hundreds of thousands. That is the situation, and that seems very, very unfair at face value. Now there is, of course, a counter argument to this whole debate where people are saying, well, it's not that easy. It is actually the case that this is all great because Tesla is getting merged into SpaceX, and that will be an amazing new company that is shaping the future of humanity. We're going to the moon, literally, and everyone will be very, very happy. So we now have the critical crowd, both bulls, both Tesla bulls, but we have the critical crowd that says, after all this wait, before we actually get paid, before the stock reprices, we are not getting paid enough if we are now having a SpaceX merger and getting $500 per share or 450, whatever it is. That is unfair. The other side of the bull crowd, Alexander Mertz, for example, many others, they are saying, forget it, this is amazing, we have to support Elon, we're going to the moon, what do you even want? That is the debate that we have to address today. And I am actually falling in neither camp, because I think both sides are a little inaccurate and a little wrong on how we have to view this big and contested debate. Because this is not about being a Tesla fanboy and supporting Elon blindly and being all excited about SpaceX and Tesla while taking a big hit on the stock. But it's also not about saying, look, we waited for so long, we supported Teslas for so long, and now we are getting a bad price at the merger. The way we have to look at that, and that's how we do things in Pioneer Lands, we have to be rational investors. And as rational investors, we have to understand how stock prices actually work, how the market prices Tesla, and we have to understand what the real fair price for Tesla actually is or will be. And for that, I want to invite you to take a little bit of a look inside my Tesla model, where I will explain where I think we are right now. So forgive me, I didn't format this. This is not CERN Basher perfection in terms of slide design. This is just the raw model. I'm just going to show you some of the assumptions here. I basically look at this whole thing through my assumptions that I adjusted now in the base model, where I'm looking at what do I actually expect to happen with Tesla over the next years, actually all the way to 2040. But the way this model works is I'm looking at Optimus, I'm looking at the core business, I'm looking at robotaxi, and I'm calculating the discounted cash flow value of Tesla, the stock. And that gives me a specific stock price based on the assumptions. What's going to happen? Now, I adjusted this. I basically pushed my original timeline from 18 months ago or 12 months ago, 12 to 18 months out, because I think we're a little late. So that shifts all my price targets to the back. And that means my 2030 price target is now a little different, a little lower, still pretty good. And after I did that, it's a very conservative approach to share price value. It's a discounted cash flow model, which is the most conservative approach you can take, in my opinion. I also discounted down by the risk that is remaining in these verticals that are coming. So for example, if you believe Robotaxi has a share price value this year, raw, based on the model of, let's say, $300, $400, but you think there is only an 80% chance that all of this is going to happen, a 20% chance of failure, you're discounting that $400 by another 20%. So here are just a few assumptions I want to share before I go into the share price and then explain what this has to do with this all-decisive question that Rebellionaire is raising here. So first of all, Optimus. I think Optimus could deliver 10,000 Optimi, whatever the name for the plural of Optimus is, this year. I think we get to 50,000 next year and to 200,000 in 2028. Now that's a little speculative. From there it then goes vertical and we have a lot of Optimi. We have 1.5 million deployed in 2030. That's my assumptions for the base model. I think that's reasonable. We will see what happens. It's a little bit an estimation. It could be more, it could be less. I think it's a reasonable assumption. Production rate will be 0.900,000 Optimus produced in 2030. Now, maybe more important, Robotaxi. I take it slow. I'm saying we get to 10,000. So kind of conservative. I think Herbert thinks it's more. I think it's actually more. So this is a little conservative. 10,000 Robotaxis deployed this year. Then we are going to 100,000 next year. I think it will be an inflection point, and then we grow very strongly, right? We grow to 200,000 by 2028, and then we go really aggressively into growth, because at that point in 2028, the problem should be thoroughly solved and all the jurisdictions should be ready for scale, and then we're scaling into many millions. Okay, not crazy. So I think it still takes until here 2000 to 10 million. It takes until nearly 2035, 2034. I think that's very conservative. It is all about the inflection point here. Are we hitting that inflection point or not? I think we will. I think we will have hundreds of thousands in 2028. Just so you know where I'm coming from with this model, okay? If we see it like this, now let's go into what that means for discounted cash flow, or I'm skipping the cash flow, I'm going right into the share price. If you do the discounted cash flow situation, you're discounting risk down a little bit, right? On top of it. I'm getting to the following share prices. For 2026, the fair value of that stock is $600. That is my fair value. That requires the stock to go to, that requires Tesla to actually deploy 10,000 robotaxis by end of this year. If they deploy 10,000 robotaxis and then they go to 100,000 and 200,000 and so on, here is the share price that would be the discounted cash flow fair value. Now, very important to understand, I do not think if this happens, these will be the actual price targets of Wall Street or of the market at large. I do think the price for Tesla stock would be much higher than this if things happen the way I think. I do think if Tesla deploys over 10,000 robotaxis this year, we will not go to 600. I think we will go significantly higher. But if we do so, we should all buckle up and be prepared for a drop. Because in the end, the market is a weighing machine. And if you want to know the true weight, the true value of Tesla, you have to look at my model. That is the true value of Tesla. And I think in any given year, we can exceed that price dramatically and potentially fall below it, even though I think that's much less likely. So this is not a price target. This is the true intrinsic value. Very different. And the reason for the difference is the analysts and the banks and the institutional investors are not that dumb. They understand if this is the true intrinsic value, but this is the trajectory, you're pulling forward these prices in the future here because that is too much of a CAGR. That is not efficient for the markets. They want to price 2026, so they smoothly go into that at a normal growth rate. Story short, the true intrinsic value of Tesla is probably below 600 right now, as long as we don't have that scaling going on, as long as we can't be sure that we actually scale to 10,000. Now, what is my point? My point here is when Rebellionaire says, look, we have waited for so long and Tesla now has to deliver robotaxi, and it is unfair to us as shareholders to merge Tesla at, let's say, at 600 or at 500, whatever it will be. My pushback is the following. That discussion assumes that whatever price Tesla is right now is the wrong price. This assumes that Tesla is fundamentally mispriced by the market, and it means that the future of Tesla, the future of robotaxi, is crystal clear and fully known to all of us, so that we all know, oh, Tesla should be actually much higher right now than it is. That is a flawed argument. When you look at stock prices and how prices work, there is a very strong argument to be made that if there's any kind of market transparency and, let's say, wisdom transparency of the future, then a stock is kind of accurately priced. And if SpaceX is priced at a certain point and Tesla is priced at a certain point and they merge and Tesla gets a little bit of a premium, that is by definition, by default, the right price, and it's fair. So it's a little bit a beginner mistake, in my opinion, to say, look, it is so obvious that Tesla will go to 4,000. It's so unfair to merge it into SpaceX, because then all the wait was for nothing. Well, in fact, we have to understand SpaceX can argue the same thing. SpaceX can argue, well, what about us? We will be at 10 trillion in 2031, and you are getting us for cheap. So the argument that Tesla is undervalued relative to SpaceX, which is the core argument here, is weak. Now, I do think that SpaceX will be a little bit overhyped at the IPO. I do think Tesla is slightly undervalued, but it's not crazy worlds apart, and we don't even know the merger price, okay? Do I believe we should have significant premium as Tesla shareholders at the merger, depending where SpaceX ends up? I don't think we need significant premium. I think if it's a merger of equals, you can argue that's reasonable. The SpaceX TAM is infinitely larger than Tesla's, because SpaceX, by definition, has a totally infinite TAM. Hey, on this channel, we do something very important. We deeply analyze, understand, and predict capital, AGI, and politics. Not just to beat the markets and make a lot of money, even though that's important, but also to build a new society and make the future good for all of us, the pioneers. If you want to help me on this journey, you can do that by doing a very simple thing. Like and subscribe. It helps me a lot. Thank you so much for your support. And let's get back to the video. So whatever Tesla's TAM is, SpaceX is infinite. Is Tesla a little earlier at the inflection point of generating insane amounts of cash? Maybe, but you have Starlink coming up. You have space AI coming up sooner than people think. You have robotaxi potential delays. No one knows it exactly. And whatever we can know, by definition, without sounding, I hope I don't sound academic here, it is by default priced into the stock. An additional argument for the fair pricing theory of the market is that the YouTubers, the Tesla tubers, from me to Rebellionaire, to Herbert, and to many other smart people, to Dan Ives, he's kind of a half Tesla tuber at this point, to, Morgan Stanley, Adam Jonas. We all got the word out. The world knows about robotaxi. The world is aware of Optimus. Tesla is trading much higher than its core business would justify. So there is significant, over 50% of the stock price is already anticipating the future, discounted with the risks and unknown factors of this whole thing. So my argument, bottom line, is the assumption that all of us know that Tesla should be so much worth more, that there's no risk discount to that future, that SpaceX shouldn't be worth more than it will be when at IPO or at merger, and that there should not be a risk discount for SpaceX doesn't make any sense. We need to grow up and say, well, in the end, these are stocks. There is a highly liquid market. There's extreme attention on these two stocks. The market decides to price the stock in a certain way based on my model, based on Dan Ives' model, based on Adam Jonas' model, based on all the discussions on Herbert, all the discussions on X, between Rebellionaire, between Alexandra, between everyone. So no one can argue there's a lack of transparency. No one can argue that there's a lack of awareness of what's going on of these verticals. And because of that knowledge, wisdom, and information transparency, the argument that this stock is completely mispriced at any given point in time, we have to reject a little bit. And the fact that I personally believe Tesla will go on a generational run this year, maybe next year, but more likely this year. Generational just means maybe 100%, maybe 200%, maybe 300%, is fine, but I wouldn't get too nervous about it because we are not even there yet. We have not announced a merger. We don't know when it exactly happens. If the merger happens in December or in January next year, I think the price of Tesla will be much higher. And if it's not, it's just proof of what I just said, that the future is a little bit unknown and there is a lot of risk baked in because delays are possible. So, when is this inflection going to happen? Either before or after. If it happens before, we don't need to discuss it. We get a fair price. If it happens after and Tesla is still cheap, there will be a reason for that. So long story short, the argument that anything in a public market with this level of attention, this level of coverage is totally mispriced and the deal is unfair, I think is structurally unsound. That's what I think. So I hope that was helpful and interesting and you understand where I'm coming from. Have the discussion in the comments on X and I'm glad to join you. Hope to see you soon.